Hey everybody, this is Ryan Mallory for SharePlanner.com. Today is October 30th, 2014. Only today and tomorrow, and we're pretty much done for the month of October in trading. Not pretty much, we are done for the month of October. There's no 32nd day in the month, so it's been a pretty wild ride. I mean, this has probably been one of the most exciting months of the year, just in general, not from whether it was the best month of trading or not the best trading month, just from a pure market enthusiast. There was a lot of fireworks. I mean, let's just put it this way: back on 10/15, people were thinking that we were heading for the 1700s, and they had good reason. I mean, look where we're at on 10/15. We hit lows of 1820. And today, we're talking 15 calendar days later, and we are at 1994 and just had a test of 2000. And we started the month. Let's see where we started the month at. September closed the month out at 1972. So in terms of actual progression, we haven't really moved a lot higher from the previous month, and September was a down month. But from where we were at the middle of the month, slap dab in the middle of the month, to where we are now, it has been a huge progression and push higher. So it's a little bit queasy, because you look at where we're at and where we're basically about 180 points higher in 2 weeks. Now, in your most trending of markets, you don't move 180 points in 2 weeks, but the market, when it starts to sell off hard and when the fear gets really bad, it becomes like a rubber band. And the more that rubber band is stretched to the downside, when that market finally bounces, it's going to bounce back just as hard, sometimes if not harder. So that's why you have a 180 point gain. That's why it really defies logic, quite honestly, because you start thinking, man, if I buy here, I'm just going to get trapped in a long position, and that might not be so. I mean, at this point, you can't really look at this market as being a bear market anymore, like we were in the beginning of October. And we've basically traded the whole spectrum of the stock universe. We were heavily short in early part of October, and we were covering shorts into weakness. And then when that market got down into the low 1800s, we started playing some of the ultra ETFs, trying to play that bounce. And it took a couple of tries, but we finally got it. And when we did, we got that heavy bounce to the upside. We were using UPRO when we finally profited off of the bounce. And then since then, we've been adding more and more positions as we go along. So where do we stand now with S&P 500, 180 points off of the October 15th lows? Are we just going to keep marching higher here, or are we going to get another sellback? At this point, it's not a dead cat bounce anymore. Okay, it was a dead cat bounce under 1900, under 1920, maybe even under 1960. But now we're above the 50-day moving. We're above every moving average there is. Okay, and it's hard to say, oh, this is just a dead cat bounce before we resume the trend lower. That's not the mindset that you can have with this market right now, because what you're going to end up doing is you're going to continue to short and be squeezed out of this market. Do I even think that the market should be up this high? I don't know, because I really try to keep my personal I try not to even formulate personal opinions of what I think of this market. I try to just let the charts be my guide. You know, when I start thinking, well, the economy's bad, the employment is this, and the GDP is that, and QE is ended, so all these variables suggests, and I hear this on CNN or CNBC all the time, these are data points that we got to consider. And it's like, screw the data points. I don't want the data points. Show me the charts, and I can work off the charts, because the charts are already pricing in all these, quote, data points that CNBC wants to spend, you know, a 30-minute set on debating with, you know, the airheads that are on that network. So, you know, show me the chart. The chart doesn't suggest any kind of resumption of the downtrend. And really, for to have any faith in a legitimate downtrend again, it needs to get back below 1820. That's a pretty pretty hefty task for the bears at this point. Not that it can't be done, and not that we can't even reverse tomorrow, but we need to let the charts show us that it wants to reverse tomorrow. Otherwise, we need to continue to trade long and strong and go from that point. I mean, I'm not a perma bull, I'm not a perma bear. I'm just, you know, perma whatever the market wants me to be at a given time. And there's no other reason right now why we should be short on this market. Now, the exposure that you have in the market, that's up for debate. But the you know, whether you're like 20% long or 100% long, that can be debated. But just being flat out short, I don't see the logic in it at this point. So I am really looking at this market only from the long trade setups at this standpoint. I'm not even looking at my bearish watch list. I keep a bearish watch list handy because you never know when you're going to need that watch list. But until the market dictates, I'm not going to start shorting the market again, period. So with that said, let's keep on looking at some of these charts. We talked a little bit about the S&P 500 already. You're above the 5 or 50-day moving average, and the 5-day moving average. You know, it wasn't something that I've always been a huge fan of in the past, but some folks in the chat room turned me on to it and you know, convinced me of its merits. And I actually have, I mean, I'm always very open-minded to suggestions that I think can improve one's trading. And the 5-day moving average is actually a really good short-term MA that you can use. Just it's not a buy-sell signal for me per se. I know it is for some, but it's more or less just getting a good, healthy feel for the state of the market. And right now, I mean, it is just continuing to push higher off of the 5-day moving average. It tests it almost every day. I mean, at least it's done so for the last 4 days. And every time it's tested, the dip buyers have come in and pushed it higher. So that's a very good sign that this market's in a pretty healthy state right now in the short term. So that's the S&P. The Dow is really the one that's, you know, smoking a trail, you know, burning a trail higher today. It's up 225 points, but don't get too excited yet, because really that 225 points has to do with Visa, who reported earnings yesterday, and you can see what they're doing. Remember, the Dow Jones is a price-weighted index, so it's really the higher price stocks are going to be the stocks that move the Dow the most. Even though like a company like Microsoft is, you know, one of the biggest companies in the world, you know, Visa is going to have, because Visa is a $237 stock compared to Microsoft, which is a $46 stock, Visa will have, you know, like a 5 times the amount of effect on the Dow as Microsoft. So in order for Microsoft to push up the Dow today as much as Visa is, Microsoft would have to be up like 50 or 60% on the day, which you know you're never going to see that in Microsoft. So the higher price stock, the more influence it has on the index. So yeah, the Dow is up, and I don't even track the Dow from a trading standpoint, but it's just sort of noteworthy today because it is at 228 points, and it's a good learning lesson about why I don't use the Dow. Its true movement is probably only worth about, you know, 100 to 130 points today, but Visa is exaggerating that price movement greatly today. So, excuse me. Down here in Florida, it's like fall season, and we're like getting into this one of the best seasons of the year. But man, sometimes it just makes me hack and cough like crazy. So I'll try to keep that to a minimum. But the NASDAQ. Another index following that 5-day moving average, very healthy. It's looking very strong. And, you know, at this point, once again, I don't see any reason to be getting like, you know, short these highs here or try to short into strength or anything else. I'm seeing a market that's resuming the uptrend that, yes, it had a bad early October, bad September, but now it's putting that to the side and looking to move higher. The rut. This is actually sort of an interesting chart today. Let's see if I can get this line move up here. Here's why I sort of find this chart a bit interesting. You you connect these highs from the July, and then you connect them again from August, and then or September, and then you connect them again here in October, and you can see that it's up against a resistance level. So if the Russell can actually break through this price point at around 1157, there's a good chance that this thing wants to continue to move higher. Now, the Russell has played less of an important role this year for me because it's been stuck in this trading range for quite a while now. And the S&P, up until like September, it was steadily moving higher, like 8%, which is about what we're at right now on the year for the S&P 500. But the Russell has just been in a consolidation area and really had trouble keeping up with the other indices. So while I'll continue to watch it, it's really not been a participant in the market this year for the most part. The bigger cap stocks have really been what's been pushing the market higher. It's not been the small caps. And let's go ahead and look at some of the stocks in our portfolio. And I'm probably already talking a lot as it is right now, but Apple is a little bit concerning today. You had, of course, the personal news of Tim Cook coming out and using Apple, his position with Apple to promote his his own choices in life, and I'm not a huge fan of people, especially in the positions of CEO, trying to use their positions of power or anything like that. Typically, I really don't care about his personal life at all. What he chooses to do in his personal life, that's his choice. But the thing I like about stocks is for them just to be about stocks. I want trading to be about trading, stocks to be about stocks. The market's a place where it doesn't care about your race, your color, your gender, or anything else. It's going to treat you based on how you trade the market. And I just I don't like holding a stock where I feel like it's starting to get politicized in a way that could impact the current gains that we have in Apple, which is like 5.1%. We bought this back on 10/21. And it's up 5.1%. It's done good for us. But what's to say that some country where Apple has a big contract, I'm not saying this is going to happen at all, but the risk is out there that a country could say, hey, you know what? We don't like what Tim Cook said. We're banning iPhone sales in our country. And the stock will take a hit because he used his platform to or his position of power as a platform for his personal life. And so I get nervous. It's not because of that particular issue that he's talking about, but it's more or less like if anybody was talking about anything in their personal life, I don't like it intermingling with stocks. So Apple, I mean, I like it. It's been on a pretty good run. I mean, you can see that it's capable of continuing huge runs when it gets the momentum going here. And it's definitely done that off the 95 lows. It's up about 12% from the middle of the month. But, I very good chance I could take the gains on this one today. I'm leaning in that direction. We'll see here as the final hour of trading approaches. Let's look at some others, though. I mean, overall, Apple trade's been great for us. I've got no complaints. We're also in RAX, and a little bit of selling here in the last 30 minutes or so. But overall, that stock has done good for us. This is the second time this month we've traded. I think we made like 1.7% on it the first time. Now we're up about 4.7% the second time. We got in at 35.93. And you can see this little basing pattern. This is what pulled me to the stock, and then we got back in. I think it was 10.23. So when it sold off a little bit there, we got back in, and it has been just pushing nicely higher. You can see the 5-day moving average at work, providing that support underneath. And ideally, I'd like to see this thing get all the way back up to 39s and fill that gap. I think that's a strong possibility. But we'll just have to wait and see what that does from there. But right now, I think the stock looks fabulous. INFY, this is INFY. I still have the habit of making stock symbols actual words that don't exist. INFY, or as I like to say, INFY. INFY got in at 62.56. We're up about 4.1%. Pleasant surprise because I wasn't sure how well this bounce was going to work out, but the charts suggested that it should bounce, and since then it's been off to the races. I can't complain. Look at the see that there's maybe some some resistance there in the 66s. So we'll see what it does there in the week ahead. But right now, I mean, I don't see a huge reason to get rid of it. You can slap a Bollinger Band on top of it. No, and you can see that it's testing the upper Bollinger Band, but it's not really getting above it. So at this point, I still like the stock. I still want to see where it goes from here. Maybe it has a little bit of a pullback tomorrow or next week, but right now, while the going's good, I'm going to keep trying to see how high we can ride this stock up. GPS. Got into this today. I actually thought about getting into it yesterday. I held off just because it's a retail stock, and sometimes these retail stocks get these crazy upgrades that just wipe out the gains that you had in the stock. So I figured one less day to hold it overnight can't hurt. And that turned out to be an okay decision, because we got in on it today at 37.49. A little bit rough at the early going as it dipped below the 5-day moving average, struggled to get above the 20-day moving average, but then it recovered around lunchtime, and it is done really good here. So we got the S&P currently, as I'm doing this, it's sold off about 10 points off the highs, a little bit, I wouldn't say it's really a concern at this point. The chart still looks pretty darn good. It's still up 8 points on the day, but we've given up more than half of the day's gains. And but I mean, I'm not in a position where I want to fire sale anything or even remotely close to that. But GPS, I mean, the stock chart looks really good on that. BLMN, we've seen 52. We got in on it at. We're up about 33 cents. Only up about 2% on the stock, or 1.8%. But the stock itself, it just has not been the most consistent of things. It's reporting earnings next week. I don't know how many more days I really want to hold this stock. It's starting to the gap between now and the time of earnings, where there's really a window of opportunity to trade, it's decreasing. It's not holding on to gains intraday or from an overnight standpoint, so that's another red flag as well. That's another candidate that might just get chopped today. And I think I covered them all, did I? No, MS, Morgan Stanley. This is another one late day after the FOMC statement was released yesterday. We got into MS. So far, so good. I mean, it's still coming out of that base of the consolidation, but as it gets out into this smoother waters here, it should perform pretty well for us. So early going, there's not really too much to be said about that except for the trade setup. Oh, we got into win today too. It's starting off. The setup hasn't been, or the move in the stock hasn't been all that great since we got in. Not too low. Actually, it was probably about an hour ago that we got into it, but it's sort of getting taken a hit from this 10-point sell-off on the market when it decided to touch that 2,000 mark on the S&P. So a lot of stocks are going down with it right now. But you can see here there's a nice little inverse head and shoulders. I know it's a little bit messy and everything, but if you look at that as the left shoulder, then you got the head, and then you got the right shoulder. You got an inverse head and shoulders pattern. Firmed yesterday, even though that wasn't the greatest of candles. But it got above the 50-day moving average, got above the 5-day, the 10 days, has the 20-day underneath. 200 way overhead, so we're not even worried about that one right now. But you got a little bit of a gap here at 192 that needs 193 that needs to be filled. So I think there's a strong chance that this stock moves up, especially considering the bullishness of the markets of late. Some other stocks that I am looking at: QIHU. This is a hard one to trade, and the main reason why I passed it up is because we already have Apple, we already have Rex, we already have INFY. In the portfolio, so that's 3. If I was going to add a 7th stock to the pick, I didn't want to be another tech stock, so I held off on QIHU, even though it does look pretty good. I think you can get in at 68.82 and probably put your stop, probably like 6. I don't know. I'd probably do like 67.35, put it right below the day's lows, see if it can just keep on moving higher from there, keep that 10-day moving average underneath it. And but yeah, I mean, you've got basically another inverse head and shoulders here too. And let's get rid of these Bollinger Bands because they sort of cloud up the picture. But you got a left shoulder there, you got a head here, and then you got a right shoulder there, and it's above. Yeah, it's above it. It's above the neckline there still. So it's trying to make a move of its own as well. INFA, not to be confused with INFY. You got this big old box pattern. See here, going from here, you just, big box pattern. It's breaking out of it today. It looks really good. Same reason for not trading it today as with QIHU. Already have plenty of tech exposure. Let's go with something like what we did with Wynn Resorts Casinos, completely different than the rest of the group. But yeah, I mean, you could put your stop loss a couple of places, 34. Let's see, you could put it below yesterday's lows, which would be like 34.47. Or if you wanted to be a little bit wider with a stop loss, you could go like 33.98. So that would probably be, yeah, I mean, that'd probably be about as far as you really need to put the stop loss at. So, and then you got CRM. And some of these I haven't checked for their earnings date, so you might want to double check on their earnings. CRM, nice downtrend for most of this year, going back to, I guess it was March, February time period. And today it's finally breaking out of it. Looks pretty good. Once again, the setup here is probably the lows from Tuesday. So if it breaks below 59.86, then I'd probably go ahead and sell it there. JNS. This is going to be the last one here. Actually, no, I got one more after this. JNS, you might not see it here. Some people freak out when I talk about inverse head and shoulders at recent highs, but they do exist at recent highs. I mean, some people say the inverse head and shoulders pattern has to be at the bottom of the chart, but guys, inverse head and shoulders, if it's at the top or at the bottom, it's an inverse head and shoulders pattern. So don't let anybody tell you otherwise. But in any case, you have a left shoulder head here, and then you have a right shoulder. You got the neckline going across. Let me just get a line here to draw that. And you can see it's trying to break out, maybe not completely above it yet, but it's sitting right on it. So if it gets like 1468 or so, it should be above that neckline. But overall, that looks like a pretty good one. It's a finance company, so I kind of expect the financials to continue to do well here. That's going to be, oh wait, DYN. I keep forgetting I got this sucker on there. DYN, this was one that a user requested that I look at. I really don't see a huge edge on its utilities, which, utilities seem to be a little bit more popular when the market was selling off. This one here, I just don't see any clear edge on. So I'm going to refrain from that one. So that's going to do it for now. If you guys have any questions, please feel free to hit me up at ryan@shareplanner.com. I'm always willing to take your questions or emails. And if you have any, if you haven't done so yet, join the Splash Zone. It's a free 7-day trial. You can find out if it's for you or not. I'm in there every day from 9:30 to 4 p.m. Usually a little bit before the market closes and a little bit after the market or before the market opens, a little after the market closes. But yeah, I'm in there each and every day taking your questions, providing my real-time trade alerts, also via email and text alerts. And if you have any questions, just feel free to hit me up there. All right, y'all have a great weekend. Have a good Halloween. Stay safe. Don't get hit by any cars. And if you see a Halloween basket at somebody's door that says take one, take all of it, man. At least that's what I did when I was a kid. All right, folks, take care now.